Good afternoon, everybody, and good morning. Very warm welcome to all our viewers, to our participants and speakers. Today's event is called Is the Public Sector Sustainable? My name is Nael Braham. I work at Accountancy Europe as a senior manager within the corporate reporting team. Not only the public sector is a major source of greenhouse gas emission, but it has also the power to set policy that can influence the behavior of private sector entities and citizens. That is to say that public sector entities public sector entities has a major role to play if we want to achieve a sustainable transition. Due to the importance of the public sector role, Accountancy Europe has been a strong supporter of the work of the International Public Sector Accounting Board. And we are committed to advance public sector projects through our comment letters, through our events and contribution, but also through our participation in IPSASB Consultative Advisory Group since its inception, myself being the current representative of Accountancy Europe within that committee. We believe that the IPSASB has done a great job by issuing sustainability reporting standards within a short time frame. And we have also supported from the beginning the decision to keep a close alignment between the private sector standards and the public sector. This will allow to leverage on existing standards and guidance. And sustainability reporting is a journey, and we are aware of the challenges that it may pose to public sector entities. That's why we support the IPSASB decision to prioritize the reporting of own operation for the time being. And we also believe that the second piece, which is reporting on public policy programs, should not also be massively delayed. In today's event, we will discuss public sector sustainability reporting and also assurance. For that, we have lined up highly skilled and experienced speakers and panelists. Before handing over the word, I would like to remind you that you can ask questions through the Q&A button that you see in the bottom of your screen, and we will spare some time during the meeting to answer your questions. Now let me introduce you to Peter Welch, who will take you through the rest of this webinar. So Peter is the chair of Accountancy Europe Public Sector Group. He has been a director of sustainability at the European Court of Auditors and is currently working with the United Nations as a consultant. I now hand over to you, Peter, for the rest of the meeting. Thank you.
Thank you, Nael. It's a great pleasure to be having this meeting and to have this discussion, which is I think just at the right time. This is the moment where the first building block of sustainability reporting on climate issues is, I think, settled by IPSASB. And there's almost a blank canvas in terms of what comes next. So this is everyone should quote Chairman Mao every now and again. So this is a moment when 1,000 flowers can bloom and people can share a number of ideas. So I'm very pleased that we've got with us Dave Warren, Deputy Director at IPSASB, to tell us where those flowers can grow and bloom and what should happen next. Dave, you've got about 8 to 10 minutes to tell us about the future of sustainability from the eyes of IPSASB.
Thanks, Peter, and thanks, Nael. It's great to be here. Thank you to Accountancy Europe for putting on this event today. And Nael, as you mentioned, you've always been a great supporter. Accountancy Europe always responds to any exposure, any consultation we put out, and you also help advise the board as part of our consultative advisory group. So thank you for all the support, and really a pleasure to be here today. As mentioned, my name is Dave Warren. I'm the Deputy Director of the IPSASB. I will spend almost all my time on sustainability and where the IPSASB is going in that regard, but I did want to put the sustainability work within the context of what the IPSASB does more broadly. So the IPSASB, the International Public Sector Accounting Standards Board, has been around for over 25 years now, and we've been setting financial reporting standards. About 3 years ago, we entered into the sustainability space at the request of our stakeholders. And I just wanted to show this slide because it illustrates what our strategic objective is, which is the top of strengthening public financial management and sustainable development through the use of our standards. And we do that in two main ways. The top half of the circle is delivering global standards, and the bottom is inspiring adoption and implementation. And I just wanted to highlight the top right quadrant of that circle is public sector sustainability reporting. That's where we're focusing. That's what I'll talk about for my entire session today, but just wanted to set the context of where this is in the broader IPSASB work program. Can we move to the next slide, please? So, Nael, you gave a really great overview of everything I was going to say today. So I'll try to take it maybe a level below, but I will give a little background on why the IPSASB got into this space, how we got started. And that's really starting at the top left of this slide. So you'll see a document up there, the Sovereign Climate and Natural Reporting. That's a document that was issued by the World Bank in January of 2022. And one of the things this document did was it called on the IPSASB to lead the development of sustainability reporting standards in the public sector. And the reason why there was this big call is because at this time, the private sector was moving into sustainability reporting, and there was a worry that if the public sector didn't keep up, it would lose access to capital markets because funds would flow to entities with more disclosure, in this case, the private sector. So that was the big call in the IPSASB. Next, you've got the second document on the left, and that's our consultation paper that we issued a few months later in May of 2022, where we went out and asked our stakeholders whether we should enter this space. And what we heard in response to that is, yes, we should. Yes, the IPSASB should lead on this. We've been setting standards, like I said, for about 25 years, and we have experience in the public sector. Climate was the priority, but I will highlight that, and Peter, you kind of touched on this, there's lots of directions to go after we finish climate. We don't really know where to go, but climate was where we should start. And the two other things we heard, and this starts to move into the right side of the slide, is the IPSASB has a conceptual framework that we can use as a basis that sustainability reporting fits within. Our conceptual framework is broader just than financial statements. It is financial reports. And we also heard, don't stray too far from what the IFRS Foundation and specifically the International Sustainability Standards Board is doing, because if it works, don't spend a lot of time reinventing the wheel. So that all led to the far right of the slide, where last October, so October 2024, we issued an exposure draft outlining what the IPSASB thought reporting in the public sector should look like for sustainability reporting. Next slide, please. So the next slide really outlines at a high level what's in that exposure draft. And this is probably where I'll spend the most time. I will come to what we heard in response to the exposure draft, but this is a good summary of what the IPSASB proposed. So I'll start at the very top, and you'll see this gray bar. And I'll say here that often what you'll see in the public sector, especially at the national level, is governments will commit to international agreements. In this case, I say UN SDGs or the Paris Agreement, and make commitments on behalf of the country or the jurisdiction. So as an example, it might be reduce greenhouse gas emissions within the jurisdiction by 30% by 2030. What's interesting about the public sector, though, is these commitments are made on its own behalf. So that's the top left, the public corporations, but they also make those commitments on behalf of the broader economy. And those are the other three quadrants. So the bottom left, households, bottom right, not-for-profit institutions, and then the top right, private corporations. And the IPSASB really split these into two categories. So I'll start with the top left, the public corporations, when the government makes a commitment on its own behalf. So think of services that the government provides. These are day-to-day activities. So it might be a school that's providing educational services or a hospital that's providing healthcare services. And what the IPSASB decided is when it comes to a government's own operations, its day-to-day activities, those disclosures should be consistent with those that are required in IFRS S2, so what was proposed by the ISSB. And the reason for that is the disclosures in IFRS S2 focus on the risks and opportunities associated with creating cash flows in the future, so your future cash flows. And what the IPSASB decided that in the government context, you're really focusing on service delivery, but those same risks and opportunities are equally important in determining whether you continue to deliver services in the future. So as a result, even though the ISSB focuses on future cash flows for the reason for the disclosure, and the IPSASB and in the public sector focuses on service delivery, they thought the disclosures themselves were largely consistent. So as a result, for your own operations, the IPSASB put forward that we should align with IFRS S2. So that's the top left. The other three quadrants, this is where a government makes a commitment on behalf of the broader economy. So in this case, think of a government using its sovereign powers, either through regulation, through taxation, subsidies, or legislation in some form or another to influence the broader economy. So this might be a government deciding that we're going to move away from generating electricity from coal-powered plants and move to electricity generated by solar panels. And this can move the entire economy. And the IPSASB highlighted this as very unique to the public sector. This doesn't exist in the private sector. So as a result, and this was said earlier, this is the second half of the exposure draft where the IPSASB proposed that disclosures around what we call public policy programs and their outcomes should be disclosed because that's useful information to stakeholders. One point that I'll highlight, and this will be something that we heard the IPSASB needs to think about more, is I said disclosures around public policy programs, but specifically it's climate-related public policy programs. So it needs to be public policy programs that relate to climate initiatives. And the IPSASB that was probably the biggest decision the IPSASB made going into this exposure draft. Some board members supported focusing only on climate-related disclosures or climate-related public policy programs because that would make the guidance easier to implement, while others, and there's an alternative view in the exposure draft, said that it should be broad. It should be all public policy programs, because if you just focus on climate-related public policy programs, you won't capture all the emissions and all the outcomes of those programs. Next slide, please. So that was at 10,000 feet what the proposals were. So we got comments back at the end of February of this year. We had almost 100 responses, which is a very high number of responses for us. We had a number of respondents that aren't our normal respondents. They're outside our normal financial reporting respondents. These are the issues that we heard about. The first one was by putting everything together, so public policy programs and own operations, that was challenging and confusing. So there was a suggestion to break everything out. I won't touch on all these, but we did hear comments about materiality. We need to clarify what we meant by materiality. We need to clarify whether the timing and whether the sustainability reports need to be issued with the financial reports. And then we heard some comments on own operations, specifically on how to calculate Scope 3 emissions, and then public policy programs. While there was general support, there were more issues to deal with. So if I was to come up again from 10,000 feet, there was strong support for what the IPSASB proposed, really strong support around own operations, but with public policy programs, while we didn't hear anyone say you're going down the wrong direction, a lot of people said there's more thinking to do here, and the IPSASB should really make sure that they flesh all that out before it becomes published as a final standard. Next slide, please. So my next two slides really touch on that last point I made on overall strong support for what we did and overall strong support for both own operations and public policy programs, but there was a cleaner way forward on own operations. So what the IPSASB decided in June, and Nael alluded to this, was they're going to separate the exposure draft into two final standards. First, and we're looking to approve this in December, we're going to have a standard that focuses on the day-to-day activities or the own operations of the entity that will be aligned with IFRS S2. Strongly supported, clear path forward. In 2026, once we get out that phase 1 document, we'll look at phase 2, which will be public policy programs, and we'll iron out some of the issues that we identified there. Next slide, please. So not a lot to say on this slide. This just illustrates that we had that decision point in June. We're going to look to December to wrap up own operations and then develop some implementation material. And then the bottom strand of this fork, you'll see that we're going to start public policy programs in 2026. And the last slide, please. I just wanted to highlight, and this goes back to Peter's point, that there's lots of room to go in sustainability reporting. We are about to issue our work program consultation to look to what we should do in 2026 and beyond as we get some resources available. And I highlighted in red that sustainability reporting topics is one of the items we're looking for. So I know Accountancy Europe always responds, but looking for anyone else that has views on what the IPSASB should focus on, we're asking for your views there. My next slide is just a thank you very much for having me, and I'll be around, and if anyone asks me questions, if anything comes up, I'll try to answer those at the end. Thanks, Peter.
Dave, thank you very much for that, and I'm pleased you're hanging around. I think we'll let the other speakers speak, and then possibly we'll have an exchange between the speakers. Otherwise, we'll have I'll come back to you at the end of the panel. The next speaker is Wim Bartels, and I'm very pleased that Wim is with us. Wim is the chair of Accountancy Europe Sustainability Policy Group, so he's my counterpart on sustainability within Accountancy Europe. He was KPMG's global leader for climate-related risk service until 2017, and also partner for corporate reporting at KPMG in the Netherlands. He's a member of the Task Force on Climate-related Financial Disclosures, which has developed guidance to help companies understand and disclose their financial exposure to climate-related issues. He's very much involved in the European sustainability reporting standards. Wim, if you can turn your camera on, we'd love to hear you speak for 8 minutes. And
yeah, sure. Yeah, I have it on, so I hope
okay, good.
you see me. And otherwise, Amanda, please let me know if it doesn't work. And in addition, Peter, to your nice introduction, after my time at KPMG, I now joined Deloitte a little over 3 years back, focusing on reporting implementation, and also on the back of my role at EFRAG on the Sustainability Reporting Board. So what I wanted to do in the next 10 minutes max is to talk a little on what the private sector experienced when they moved from voluntary to mandatory reporting. I've been in the space of sustainability reporting since 2003, so I'm coming from the voluntary times when the private sector was a kind of learning about what to report about sustainability, and they started with their actions, the great programs they had, good examples, and then moved into indicators until 2010 or so, I think, when a number of companies realized, well, maybe we should set a target for some areas, and they started to set targets. But what then happened was when they didn't meet these targets, they either moved the goalposts, so they put the target forward in time, or they changed it close to the year that they had to meet the target. And also at the same time, the concept of materiality came into play, particularly driven by the Global Reporting Initiative guidelines that told companies to run a materiality process and identify the key topics that they would need to report upon because they had a significant impact there. And when then the EU came with their EU regulations, that all started to change. And what I wanted to do is show you first of all where we are at currently, and what the essence is of what we are looking for under the mandatory requirements, and then what it means for companies and what they have learned. So if we move to the next slide. I'm pretty sure that you all are aware of the so-called Omnibus initiative, and I'm not going to touch upon that in great detail because that will take us another hour, I think, to explain. But the one key thing, I think, on this slide is that what the private sector and also auditors, amongst others, learned from the first round is that we all got into quite a compliance-driven mode, resulting in reporting at a fairly detailed level on the data points without necessarily addressing what is the essence of all this reporting and the EU requirements, which is in reality for companies to report on their material issues from two perspectives. On the one hand, the impact they have on the environment and society, but on the other hand, also the risks or opportunities they face in financial terms from those developments in regard of sustainability. And climate change is, of course, the most obvious, where companies now face significant financial risks. And that double materiality lens already resulted in a number of new insights for companies, particularly on the risk and opportunity side. But for some part also, particularly for companies who are not so serious yet, if I may say, about reporting, to also look into the impacts and learn about some additional impacts that they need to report upon. And that, I think, is the real starting point, whether you are in private sector or in public sector, is to take that lens of materiality, or call it significance. What are the key issues that you would need to report upon because you have an impact there on society and therefore also the environment. What companies happen to do then is to look into all the data points that you see on the left side. And as you can see in the set 1, the original set of standards before Omnibus, that were about 1100. And many companies started to report on many or most of these without taking regard of what is actually the intention of the standards and the EU Commission's proposals, which is to drive our economy towards a sustainable economy. Therefore, for the private sector, to basically, for those material issues that have been identified, to understand in one sentence, how are you managing this? That means what are the policies that you have set for those topics? What are the metrics that you use to monitor your progress and performance so that you know where you are? What are targets, if you have set them, where you want to be? And many companies nowadays have set net zero targets. But then also, finally, what are then your action plans to move you from your current performance to that target performance for climate net zero? And that loop, if you like, that you see on the right side of this slide is what the Commission is really interested in, but what had taken us a bit away in the first set of standards. And companies therefore have now learned, I think, with the upcoming Omnibus in mind, that they need to focus more on what really matters to them and their stakeholders, and then to really talk about how do I measure, how do I set the policy? If I have a target, how do I get there? And how do I explain also my challenges? Coming from the voluntary time, there was much more fluidity there, much more room to maneuver. With the standards, that has become much less. And in the exposure draft that you see, final word on the left side of this slide, you see the 347. At EFRAG, we have significantly brought down the number of data points with the intention for companies to really focus on that what matters, which is how do you drive your performance and get us to a sustainable economy. If I summarize that in my next and final slide, then you could also present it by means of a circle. And here I would also briefly like to highlight the value of auditors in this play. Auditors have been somewhat criticized that they were only looking at the information and only looking at reporting on all the data points without looking into all the meaning of it and the substance. But I have highlighted on this screen, I think, a number of areas where auditors have played, I think, already a role and should play a role, in my view, going forward. Of course, it all starts with these material issues that a company would focus on. And many companies then turn that into a strategy, and sustainability, ESG strategy, or make it part of their corporate strategy, and then they integrate that in that strategy. For the auditor, that's already a point to consider in a discussion with C-level in particular, if you have identified material issues, why is that not in your strategy? If I would translate it to public sector, I would say if you have certain impacts on society, why is that not high on your list of public policy and commitments? Then the next, and it relates back to the slide I just showed, it comes to policies. No, sorry, it's still the previous slide. It comes to policies. What are you setting as a policy for each of the topics? And there the auditor could focus on the progress. Are you really making progress, and is that policy also driving progress really, or is it a bit of a, call it, sorry for the word, fluffy one that does not really mean much? And then it comes to a very important point, which is measuring where you are. In public sector, I would say that is the impact you really have on society, on mobility, on health, on well-being, things like that. For companies, it's in many cases also levels of emissions, level of water use, working conditions, and things like that. The metrics are very important to measure that, of course. And coming from the voluntary times, a lot of that was done with Excel, non-systemized, and now we are getting to systems and processes. And that's, of course, where the auditor plays a critical role to make sure that the reporting on that is, and the data collection is robust and it's relevant. And then if a company sets a target, many companies now realize I need to focus also my targets. I can't have a target for everything, but I need targets in key areas, particularly if they are linked to my strategy, where the auditor again already plays a role in looking at the substantiation. Is that just a target that is made up, or is it based on some research or maybe scientific evidence, or, for example, industry practice? The action plans then are the next step. Many companies are now learning that they need to work on their actions and really build it into longer term plans. They should be aligned with targets, of course, before it gets into the reporting. And the reporting, as said in wave one, in the first year of reporting under the CSRD, has become in a number of cases quite extensive, more lists of data points rather than a story about where the company is heading and what their key issues are that they are working on. And also some companies struggle to make that a fair and balanced picture. And you can see, of course, the role of the auditor there to identify those areas where maybe challenges have been noticed but are not made that explicit in the report. And for a balanced picture, that may be well needed. And then the circle is round to go back to strategy, maybe to update it and go back to policies and the rest again. So yeah, in my final few seconds, I would say companies have learned that they should continue or need to become serious about sustainability and their key issues, that they need to really integrate it into their management, in their management cycle, and focus on the progress that they are making on the basis of a limited number of targets, report on it in a transparent way, and focus on the long term. And with that, Peter, I hand it back to you, unless there are any questions that I should answer. But otherwise, I hand it back to you.
Wim, I'm going to ask you, first I'm going to apologise to Deloitte, because I realised as I was reading your biography that it looked a bit dated. So I'm sorry to Deloitte. Secondly, I mean, you've made some really interesting points. And I just find myself asking how we really managed to get people to focus on what is material, because, you know, as a financial auditor, I found that many people want to give a lot of space to immaterial financial disclosures rather than focusing on the key ones. And secondly, how do we make sure that people are even-handed and give as much emphasis to the bad news as to the good news?
Yeah.
My perception of old voluntary reporting was that fuel suppliers put pictures in their annual reports of solar panels on the station forecourts where they were selling petrol and diesel. So how do we focus on the material, and how do we make sure we're even-handed in terms of what we put out?
Yeah, thanks. Both very relevant points, and that material, the material issues is in itself a call it difficult area, because it's not mathematics, it's not financials, it is therefore to a large extent judgmental. If I for the moment take it to the private sector, it all starts with the business model. It all starts with what are you doing as a company. You could of course translate it to the public sector as well. What is your role that you play in the public sector? And based on that role, you already know to a large extent the issues that play for you. If you are in manufacturing, you have to use energy. You have to, therefore, you will emit carbon emissions, and therefore climate and energy are material issues that follow from your business model. In public sector, if you are a hospital, you know what you're working for, right? You know what your key purpose is, if you like, and you also know with that also in a hospital you use a lot of materials because of hygiene and security, of course, safety, patient safety, and you want to care about the health of the patients. So starting from that model drives you to what I would need to report about, if you like, but also work on, right? A hospital I would assume, work on, call it patient satisfaction, the number of patients that they care for and that they have made recovering, etc., etc. So focus on the impact that you have on people's lives. In addition to that, and then I get to your other point, in addition to that, look at what the world is concerned about and ask relevant stakeholders of your organization. And that collectively will still need you to make a judgment call in the end, as the management, if you like, as the board of an organization, or the management, and say these are the most significant ones that we need to focus on. When it gets to reporting, you come to this very challenging question of, and how do you balance the good news and the bad news? I tend to say organizations are like people. When you ask them how you're doing, they always say good, right? And they tell you about, no one says like, oh, this didn't work this week, and oh yeah, I tried to do skiing, but I really can't ski, right? You start always with, I had a great week, and etc., etc. And that's what companies also do, and organizations broadly. I think first of all, it is making the organization aware as the auditor outside in, but also as the management. We want a balanced story. We want you to talk about the challenges, and we're going to position it in a neutral way. No one is going to say like we are a bad company, and that is not informative. But to say we are on a path to our target, but it may be challenging to change our product portfolio, is something that you can do in a very neutral way. And I think for the auditor, there is a specific role here to call it a question and challenge that by the procedures. We'll not go into the procedures now, but by the procedures to challenge that and make sure that in the end it is a balanced picture. The serious companies you don't have real issues with, they know that they need to be balanced, and they will also be scrutinized by others, by journalists, by investors, if they go over the top and get into real greenwashing, if you like, not let apart fraud. This is very much an awareness issue, I think, first of all, and then procedurally make sure that you get all the challenges to the table before you put them in the report in a neutral way. I hope that is somewhat answering the question, Peter, for now.
Wim, that's brilliant. Thank you very much for that, and thanks for sparing your time this afternoon. It's great that different parts of Accountancy Europe are working together these topics. So thank you for that. I think you have another conference you have to go to. So
I do. I stay on for a couple of minutes and then I need to step out. But thank you so much for inviting and good luck.
Thank you very much. So thank you. So now I have the pleasure of introducing Delphine Moretti, who's one of the world's foremost experts in public financial management, with experience from the IMF and nowadays the OECD. And Delphine is consistently interested in how reporting supports decision making, and she wrote a very interesting, or she co-authored with one of our other participants, and Martin and Georgia, an interesting paper that she's going to present to us now. So Delphine, pass the floor to you.
Thank you very much, Peter. Thank you for the kind introduction and the invitation today. I'm really glad I'm speaking after Wim, because I think what I'm going to say is very much echoing some of the points he made on the lessons learned from the first time implementation in the private sector. So as you said, I'm going to present a paper that I co-authored with a number of colleagues whose name you can see on the slide. This paper was published more than 1 year ago, written actually more than 1 year ago. And I saw that the IPSASB already took on board some of the comments provided by the stakeholders on the initial proposal they formulated, but that were also formulated in this paper. So I'm going to focus on what we think is still important to address in the future for making public sector sustainability reporting a success. And as you rightly underlined, Peter, for it to be useful for decision making, which is a point that Wim also made very forcefully. So if we move to the next slide, I just want to begin with a short reminder of the genesis of sustainability reporting and the fact that it came from the private sector, where sustainability reporting emerged from the corporate sustainability and responsibility principles that have gained significant traction in recent years and which have spawned several other influential frameworks, including corporate and social responsibility, CSR, and responsible business conduct, RBC1s. And in nature, as Wim explained, sustainability reporting is about enabling organizations to report on how they perform against these corporate sustainability and responsibility principles. And here, an important word is corporate. So if we move to the next slide, what you see here is the slightly more complex principles and commitments that govern sustainability and responsibility in the public sector. In short, these principles, objectives, or targets that exist in the public sector emanate from several sources, which can be international or national. So if we push on the button of the slides, exactly, thank you. You will see the international targets and commitments. The ones that come to mind are the Paris Agreement, the SDGs, which establish the global context and objectives that influence national approaches. Then if we click again, you will see the national targets and commitments, which are the country-specific plans whose level of alignment with international treaties or commitments is variable. The third level is on the right, the governments, the actors, sorry, the landscape as the role of the governments, which decides on environment and climate-related policies implemented by one or more public entities. And on the left, you have the individual public entities, which, like corporations, face climate risk and opportunities, and their own operations have sustainability impacts. So what I want to say here is that unlike corporations, public sector entities may implement environment or climate-related public policies that often don't fit neatly within one framework, one set of principles, one set of commitments, but involve several types of actors and have several layers. And of course, this multi-level commitments and governance structure is creating a lot of complexity. So if we move to the next slide, there is another point I want to make, and here I really want to emphasize the difference with the private sector, which is that in the public sector, there is already a lot of information on sustainability that is produced. Due to their international and national commitments, governments have already incorporated sustainability considerations into their budget and financial reports. For instance, there is performance budgeting, green budgeting, SDG budgeting, and these are common practices in the OECD. Second element, which already exists, framework that already exists with regards to climate risk and sustainability governance. A lot of countries are already reporting on that via their fiscal risk management frameworks and their fiscal risk statements, which may track, for instance, and quantify climate-related fiscal risks from infrastructure damage to transition costs. Governments, number three, governments also report on their climate policies as part of international treaties such as the Paris Agreement, with many OECD countries having recently prepared their first biennial transparency report, the TCFD reporting. And finally, at entity level, some public entities have started to use some other sustainability standards on a voluntary basis. So it's not, there is here a big difference with the private sector, well, that I really want to emphasize, which is that in the private sector, there was nothing or very little, whereas in the public sector, there is a lot to be done. There is a lot that is already done, sorry, and that has been done for years. Performance budgeting has been implemented for years. Green budgeting started 10 years ago. SDG budgeting is done for a very long time also. Fiscal risk management similarly. And again, there is all this international reporting that exists. So what does this mean with regards to sustainability reporting? If we move to the next slide, we identify a number of challenges that need to be addressed for the public sector specifically in advancing public sector sustainability reporting. The first one is the risk, managing the risk of parallel and overlapping reporting streams. I've just listed 4 blocks of already existing sustainability reporting on fiscal risks, performance indicators, green budgeting, where there is tagging mechanism. So how do we make sure that there is no overlap, no contradiction, no problems with definitions that are not consistent over the frameworks? We know that these kind of things create problems, and they don't create transparency. They create bridge tables and inconsistencies and problems of understanding from the readers. There is also the difficulty in defining materiality for diverse public stakeholders. I was saying that in the public sector, you have entities that may want to monitor opportunities and risks at entity level. There are international treaties where there are some very important international commitments. You have the government level. How do we define materiality at all these levels? There is also the question of remaining accessible, because when we talk about the public sector, what we want is citizens to understand and parliamentarians to understand. And again, we've seen in the past with accounting reforms and reporting reforms that the technical vocabulary, the complexity of the disclosure has prevented transparency, has been a problem because citizens do not understand the information. So we already have a lot of information, but we want to add more. So how is this going to help understanding? For me, it's not a secondary problem. That's a key challenge. And this is something that should be the matrix for the new standards. And finally, obviously, there is the question of the administrative burden and capacity constraints, which is an echo of the first points I was making. There are already reporting streams. If we want to create new standards and new reporting requirements, we have to show where are the gaps and where to show where is going to be the added value from the new reporting requirements. Because at the moment, ministries of finance in the public sector spend a lot of time on reporting, a lot of time on producing reports that sometimes overlap. they say that this is preventing them from working on more managerial and policy-oriented issues. And I think this is something that we need to acknowledge and hear. So very briefly, because I see I'm a bit late on my presentation, I only have 1 minute left. If we move to the next slide, the 3 key challenges that we see in advancing public sector sustainability reporting in the future are on the slide. The first category is informational obstacles. For non-financial information reporting, data availability and reliability is a fundamental challenge. And this will likely be also the case for sustainability reporting. We also see the risk of gaming indicators as well as inconsistent methodologies across different government entities that would undermine comparability. So this is one challenge that we need to understand even before we issue the standards, in our view. The second obstacle, and I think Wim mentioned that very clearly, are organizational. Many public entities have limited decision-making autonomy to act on sustainability policies, raising the question of the meaning of reporting without associated accountability. And the third are cultural obstacles. As with any performance framework, and again, there is a lot of experience with these frameworks in the public sector, a compliance mindset may develop which prioritize checking boxes over improving results. Again, a point that was made by Wim. So finally, without leadership commitment and addressing these obstacles and thinking about them in how we define the standards, sustainability reporting risks becoming a peripheral activity rather than a driver of decisions. I had the last slide on the way forward, but given time limits, I think I'm not going to comment on it. And the reason why I won't is also because Martin, with the mastermind behind this figure, is on the next panel. So I think he will be able to walk you through all the steps of making sustainability reporting effective in the public sector. Thank you for your attention and this opportunity of presenting this paper by the OECD. Thank you.
Delphine, thank you very much indeed. And especially, I'd like to thank you for making so well the point about the public sector as a whole, not starting from a zero base. I'm in general on financial reporting issues. I'm very convinced the public sector should be very closely aligned with the private sector. And I think you raise a good question in terms of where accountants and auditors can add value, given that there are things which are already there. And some of the sustainability reporting is suggest, in fact, would recycle existing statistical reporting into the financial statements, which doesn't seem to be massively adding value. I think, unless Dave wants to comment, I would move on to the panel discussion. So that's a no from Dave. I'll move on to the panel. And I think I'll start with Bernard Schatz, Director of Public Sector Audit or Sustainability Audit in Pricewaterhouse in Vienna. Bernhard, I would really like your perspective on how accountants can add value in this area.
Yeah, thanks, Peter, and thanks to all the speakers for the really excellent and very insightful presentations. I really enjoyed them. I think there has been already very interesting points being made, interesting points that can trigger discussion, and I think where the accounting profession can contribute, I think Wim already also touched a lot of points here, is that trusted information is something the profession has been tasked to produce for a very long time. So be it by being accountants or by being auditors. And there's a lot of familiarity around the due diligence process. So what does it actually mean to collect information? I think we've heard from all the speakers that there's a lot of consciousness around the effort it takes, the onerous part of collecting this information, making sure it is consistent, that there are internal controls and the likes, and that it is purposefully used, right? Because I think One, and also Peter, you touched on that with your remark on the statistics. One threat is actually kind of just reporting on what you have rather than what might be interesting. And hopefully some of what you already have is interesting as well. But also the question on the presentation of the information, I think we already had a lot of input around that. So there is a need for storytelling and sustainability, definitely. I think, but there should be always the data be connected to the story and not the other way around. So some checks and balances around that. What would it mean to obscure information? I think we are very aware of the impacts of omitting information that might be necessary, but there's actually also a phenomena where you put out a lot of information. I think also, Delphine, you have touching that to some degree, that you can overwhelm people by a lot of information and still there might not be any usefulness in the decision-making process associated to that. I also think what is really important, and Wim made that point, that if you ask people how they feel, they always say I'm fine, and I think this is very true. At the same point, if you ask people whether you find that credible, I think almost everyone is going to say no, it's not credible, right? So this kind of giving some vulnerability to the assessment, I think, really enhances and adds to the credibility. And I think we've seen this also I think we now have roughly 850 CSRD reports out in the European Union. And if you look at the tonality, it really shifted from I would say, overwhelmingly positive and overwhelmingly celebrating the impacts you're having to really way more thinking about the risks and shortcomings you might have in your organization. So I think that kind of shift really adds to the credibility of the discussion with the data that's being provided, as well as kind of handling this kind of management bias, optimism bias, because clearly we do want to have people working for their organizations being positive about the impact of the organization, right? So you have to kind of get a second or third party in to check with them on whether they might be overly optimistic around what they are doing. And maybe two last points I think I would want to bring in is the question of connectivity. So I think the accountancy profession is really used to make sure that assumptions and methodology is consistent throughout different types of documents, be it financial statements, be it sustainability reports, be it budgets, right? So I think also Delphine, you mentioned there is a risk that you might have different concepts flowing around in budgeting and then in reporting and maybe also in risk management. And this is a very real risk when you look at organizations, be it in the private or in the public sector. And the last point I think that might be interesting as well is that particularly in sustainability, I think because this is a global issue and a global problem, it needs global solutions, we usually very quickly arrive at a very high level of discussion. So we talk about governments, we talk about large entities, rightfully so, because they have the biggest impact. But if you look at the performance, and I'll take a snippet from the discussions we had with the panelists earlier, I think I heard something about baseball, right? If you look at the performance of a baseball team, you can easily say whether they are winning or losing. But the question is why? And if you want to assess that, you will have to look at the individual players and how they interact and what the actual performance is. So I think you also need information on an entity level to really better understand the performance of the whole ecosystem, and whether you only have to kind of switch a player or kind of give them some coaching or change the whole team, right? So that's a very different angle also from a political perspective. So maybe those are kind of elements I would add where the accountancy profession is quite experienced and might be able to support as they do in the private sector.
Thank you very much for that. There's a whole branch of statistics devoted to baseball, I think. So I will stay away from that. I'd like to turn to Paul. Paul Winrow is a partner at Mazars, dealing, I think, with public policy and regulation, if I've got that right. But Paul, I'd ask you the same question, I think, as I posed to Bernard, but if you could focus on the role of auditors in terms of adding value, that would be, I think, a necessary complement to what Bernhard's told us.
Yeah, thanks, Peter. And anyone spotting over my right shoulder the baseballs, you'll know that it was me that was talking about baseball. And I wouldn't change the entire team, even despite what happened last night. In terms of the auditors then, and a lot of what I was going to say has been said, but one of the things that I pulled out of the report that Delphine and Martin worked on, among others, from the OECD, was a bit there about how you can make a success of sustainability reporting. And what they'd identified there, I thought, summarised it at a high level really well. The auditors have multiple roles, and the audit profession can have multiple roles. Firstly, as advocates, advocating for sustainability reporting, keeping it on the agenda, promoting the importance of sustainability reporting and assurance. They can act as advisors, so sharing expertise on implementation challenges, and again, some of what Wim was saying earlier on, taking the learnings from what we've seen in the private sector over the years and bringing that into the public sector. And then obviously acting in our day job as auditors, providing the assurance to build the trust that Bernhard just mentioned there, having just trusted information. So I think there's multiple strands to what auditors can do and contribute to sustainability reporting and assurance. Obviously, most of it is going to be on assurance. So just talking through that a little bit. I mean, the first thing I always say when I'm talking about sustainability assurance is it's assurance, it's not audit. They are very different things. And I'm sure we might come on to the thorny topic of limited assurance at some point during this conversation. But I always say it's not audit, so don't talk about audit, it's assurance, because that risks, I think, an expectation gap that somebody's getting exactly what they're used to from financial statements audit. But I think financial statements audit is a really well placed to do this work, to provide the assurance. You know, we've got the skill set that we've developed over years of reporting on financial statements, and non-financial reporting is pretty much the same in terms of the skill set. You need to understand controls and reporting frameworks to be able to identify and assess risks. You need to develop a response and different types of procedures. And we've also got what are often called the softer skills, and I always use big inverted commas around that because they're really not soft, they're very hard. Things like professional judgment and skepticism. So we've got all of that skill set. And I remember a few years ago, I was talking to somebody in an audit methodology conversation about auditing different sectors, doing financial statements audit. And he just shrugged his shoulders and said, well, audit's audit, right? And to a certain extent, I think if you apply that to sustainability, audit's audit, yes. Sustainability is just different types of information. And another phrase that I've heard, and I know use quite a lot, is that sustainability assurance, it's a knowledge gap, not a skills gap. So you're applying the skills that you've got, you can do the assurance over sustainability as long as you learn that knowledge. So I've now started moving on and calling it assurance is assurance, right? Because as many auditors don't like, or audit technical people don't like to hear that audit is just a type of assurance after all. The other thing I was going to talk about, but I don't know, Peter, if you want to pick it up later on, is the auditability of the information. I could do that now, or we can. So I think the information that's produced does need to be auditable. And when we talked at the IPSASB CAG meeting, because I'm on the CAG for IPSASB, some of the feedback I got from the other firms when we talked about it was that in the public sector in particular, audit and assurance is the bedrock of whether the public thinks that information is credible or true, some people might say. But, you know, assurance is absolutely critical in the public sector to that. But the challenge there becomes for the information to be creditable and auditable, you've got to have the processes, the data, the controls, and all those things that others have talked about already, to make sure that the data itself is reliable and that can actually be assured. So is that realistic? Question mark. I think in the short term, I'm not sure it is realistic necessarily in the public sector, and I'm not 100% sure in parts of the private sector either, but they've had longer doing this. And there's a number of reasons for that. I think everything's rapidly evolving, so the nature of the reporting is evolving, the world's evolving around us. We need to build capacity, both in the assurance market, but also the public sector needs to build the capacity and establish the robust systems, process and controls that I talked about to produce that reliable information. So I think there are going to be challenges over the next few years. Will we get there? Yes. How quickly will we get there? I'm not 100% sure. But certainly there are going to be challenges around that capacity piece.
Paul, thank you very much for that. I think we're probably going to get back to these questions, but I'm going to bring in Katerina. Actually, there's one thing I think I'm going to mention first, which is in my experience of auditing sustainability information, not necessarily in the accounts, I've had the experience of telling a client, quite a large European client, if you understand me, that we were going to look at some numbers, some optimistic numbers they were producing. As soon as we announced that we were going to look at them, the figures got revised down quite a lot. So I do think there's a very basic role for auditors. Katerina, I'd like to bring you in. As I do so, I want to assure everyone that we will share the slide deck. And we may try and change the name of your consultancy, Katerina, because I know it's really Resilience Squared and not Resiliency. So, so we do that. Katerina, you've got a long experience. We worked together in the European Court of Auditors some time ago. You were heading up sustainability reporting for Amazon in Europe more recently. I think, to be honest, that given the discussion we've had, the question I want to ask you is sort of, where you think accountants and auditors really, and I think annual reporting alongside the financial statements adds value to what exists for the public sector.
All right.
Yeah, so that's a slightly different question than we planned, Katerina.
We didn't agree that question,
I'm following
but
the flow.
I know you, and that's fine. So I think where auditors and accountants add value, and I sort of have to say, well, as an auditor, a former auditor, of course, I would always say they add value. But what I've seen as firsthand is they make the information much more reliable. And what I've seen, like in public and private sector, information has been published several years, and suddenly, with, as you said, the threat of an audit, or the opportunity of an audit, it is suddenly revised downwards or just getting more reliable. And I think what I've seen in the private sector is that management does appreciate that. And how they can add value is also right now, I think we can all look back and see what has happened the last year in the EU on private sector sustainability reporting. That's why I think it's really a really good time that IPSASB sort of tried to prioritize, go operations first, and now, is looking, what's happening next year, because the environment is different. And I think there's sort of, as accountants and auditors, we can hopefully cut through of the narratives, which are now sort of being spun. And I can talk a bit more freely now because, I'm independent. Sort of that this is about simplification. We're actually already going further because at Amazon, we had a leadership principle, invent and simplify. And I think we could all subscribe to that. And I think that was really good. Now, at the same time, there's the leadership principle, with size comes responsibility. So big companies and should still report. I think that auditors and accountants sort of cut hopefully through this political narrative at it is just about simplification, reduction of burden. I think this is sort of the main danger now in any standard setting procedure. And it's sort of a bit of a simplified answer where I say, well, don't fall into the trap of saying IPSASB is simpler, or it was there, just focus on climate. And I know you've just focused on climate for a start, But what I've seen in the private sector is that you can't deal with climate and environment alone. And I think that also will apply to the public sector, because if I'm just looking at, I think we have 200 billion per year going into nature-based solutions. So advancing in nature, and we really want to have more into nature. So positive programs going into nature. We've burned $1.7 trillion into negative subsidies. So in terms of materiality, we really can, as auditors and accountants, look at the big picture and also sort of ask then the question, so that's actually not about financial materiality. It is actually more about the impact and what Wim was saying about the significance. And sort of, you see that actually in the language over the last few months, we have shifted in terms of more significance, perhaps less reporting. And then I think also in terms of where do interventions come from, looking at what is the cause of why do so many companies now say, oh, when the EU is now obliging companies to implement transition plans. So basically say how companies will achieve their net zero targets. Why is there so much resistance? What does it tell us? So I think this is, I could talk endless things, but I think there's accountant and auditors, have a lot to contribute, and especially now.
Katrina, thank you very much for that, and I'm sorry for having changed your question at the last moment. But Martin, I'll move to Martin. Martin, you were well teed up by Delphine earlier to tell us about how all this debate is going to affect decision making, and I think I think we've heard everyone now, so you're the last person to speak, at least on the first go. And it would be good if you could sort of pull some ideas together on how standard setters and accountants can produce information which is decision relevant.
Yes, thank you, Peter. I'm not an accountant, so it's an extra honor to be here, I guess, today. Just to a little bit to introduce my perspective, I've been studying the implementation of performance budgeting in different governments for the last 20 years internationally. So, and there are, as Delphine also mentioned, there are some lessons, some hard lessons to be learned that I think may be overlooked, and I get to the role of the accountants, how the accountants can help or maybe even aggravate some of those problems. The first lesson is that producing and reporting non-financial information on outputs and outcomes does not guarantee use. It may be helpful, and we used to believe that what gets measured gets done. But when you have an enormous amount of data points and limited capacity, that no longer is the case. And we've learned that the hard way with many governments actually drowning in an overload of metrics that they were reporting and that no one was actually using, or at least most of them. More specifically, this could be to make the problem a bit more specific. It could be the information itself. It could not be reliable, which means it's too risky to use for civil servants or politicians. And I think this has been covered by the previous speakers. Something that has occurred in virtually every case that I've seen internationally is that capacity requirements were underestimated with the kind of reforms that used the budget cycle in the annual report for to report on non-financial outcomes. Finally, well, culturally, we have to take into account that in government, most government organizations not doing anything wrong is valued more highly than optimizing results. And this is something that comes with every bureaucracy. And so we have to take in mind that with doing these kinds of reforms, reporting reporting will not become a goal at itself, and we actually feed this compliance bias. So now answering your question, what can the auditor do, or maybe what should the auditor avoid doing, in my view? What is obviously helpful, and this has been said before, what audit always does providing assurance on non-financial information, is it complete, relevant, reliable, etc. But moreover, actually, and this is a standard here. This is where standard setting can help. Having a common framework for this cross-cutting issue that cuts across all kinds of organizational and budgetary silos can help provide a common vocabulary which eases the internal dialogue. And this is the most important driver of performance information use, the internal dialogue. And what we've seen, and this is easily confirmed by most of you probably who've looked at public sector sustainability, government institutions all tend to make their own definitions or their own measurement intervals, which makes this a really hard process. So this is something where I think auditors can play a really positive role. There are when it comes to the issue of the compliance bias, the cultural issue, one of the risks that I think auditors should take into account is that they should refrain from demanding unrealistic precision where this cannot be achieved analytically, or at least not yet. For example, some of us, European Commission, for example, uses these real marks. Now, I'm not a big fan of budget tagging itself, but if you want to monitorize sustainability efforts, you would have to choose, is this program contributing 100%, 40%, or 0%? As an auditor, there's plenty of reason to criticize this, but say, okay, this is unreliable, make it more precise. The auditee will only have to make additional assumptions, which can be criticized just as easily. So, and I've seen this in performance budgeting. The indicators often are never good enough, so we add more and more, which feeds to the capacity problem, which is the last one I want to address. The capacity issues. What auditors or actually standard setters should I think keep in mind is that overloading the sector with new requirements will obviously add to this problem, but and maybe even worse, it may displace capacity towards reporting, where we actually need capacity for more for analyzing and making the kind of cycle that Wim talked about. Reporting is not a goal at itself. It should feed into the analysis on are we achieving our goals and what can we do better. So instead of demanding more precision, where this is may not be feasible at the moment, I think auditors should focus on, okay, are the kind of KPIs that are reported, are they aligned with the strategy, with the management control system, or is it just reported for the sake of reporting? And obviously, the materiality assessment is the key to managing this in a sensible way, which would bring me to the current IPSASB, but that may be another question. So let me stop right here.
Martin, thank you very much. And I should say, I'm very pleased that we've finally done an event together, because I've been reading your work on performance budgeting for more than a decade. So it's very good that we're finally online together, at least. There was a question in the chat. I think what I'm going to do is say something provocative myself, and then pass to everyone in turn, starting with the panelists and then going to the two speakers. There's a question in the chat, which is why give priority to climate change? And I mean, I have a perspective on this, which is that probably we're all underestimating the impact of climate change it's reflected in food prices. Lots of oranges, for example, have become much more expensive because of what's happening in orange growing areas. Last year, potatoes were extremely expensive because of the heavy rainfall in the wrong part of the year. So there's a massive, and they're not problems that people necessarily associate with climate change. People tend to think that climate change means they need to run the air conditioning a bit longer, but it's much more subtle than this, I think. The Office for Budget Responsibility in the United Kingdom has this year produced an estimate that UK GDP would decline by 8% because of the impact of climate change by the second half of the century. The actuaries, accountants like to joke about actuaries, and we'd like to say that an actuary is someone who thought that life as an accountant was too exciting. Actuaries have been saying things like firms are completely blasé and about the impact of climate change because extreme weather events mean that it will be impossible to insure commercial buildings in many places. And this is actually already the case in some parts of the United States. So my question to all of you is, are we right to focus on climate change, and what else should come? What should come next, or what should come first if the answer is not climate change? So maybe I'll start with Bernhard, then Paul, then Katerina, then Martin, and then Delphine, if she's still online, which I hope she is, and then finally Dave can wrap up the session for us. So Bernhard.
Yeah, thanks, Peter. I think a very relevant question, actually. And if you look at the frameworks that are more comprehensive than what the IPSASB and the IPSASB are currently discussing, so the ESRS is basically and GRI, you will find a variety of topics, but actually there's a huge interrelation between those topics. I think, Katerina, you already mentioned biodiversity, right? So there is a clear path of the connectivity between the warming climate and the impact it has on biodiversity. If certain regions of the world become inhabitable and you can't find your precious resources there, then circular economy out of a sudden gets interesting. So I think it's this kind of question on maybe what would be your biggest impact as an entity, where you would go next, right? So yes, climate change is the overarching element, but what drives climate change, or what is your opportunity, your role? Does it come more from a process point of view in construction, or is it more a social issue, right? Every transformation has its winners and its losers, and who actually is going to take care about the losers? Usually the winners take care about themselves, but who is really taking care about those who might be unfortunate in those changes? So I think it totally makes sense. And I think if you only analyze and discuss climate change long enough, you will arrive at what you would call a different topic, like circular economy, like workforce, like value chain. And maybe very last point I might want to add also as well, because I think there's rightfully so a huge respect on, there's a lot of work associated to that. And the only thing I want to point out is that usually doing something for the first time is way harder than repeating it. And I think, Katerina, you have experience as well in that from a very practical point of view. And also the organizations we are supporting, no one of them is now stopping the effort, because they have made that peak of investment, and actually now they are kind of getting the benefits, and they don't really see the benefit of cutting down the marginal cost they're still incurring. And maybe the last point really to that is kind of to draw from, I think it was Donald Rumsfeld quoting Socrates, where he kind of said, you know your knows, you know your unknowns, but there are your unknown unknowns, right? And it's very much about finding your unknown unknowns. So there is some costs to be associated with kind of gaining that knowledge. But I think particularly in what would describe the environment, knowing getting to know your unknowns is really important.
Oh, Rumsfeld. We miss him, I think.
Didn't want to give him too much credit. Let's
Paul, we can come back to you for maybe for a little bit of sabermetrics and
Yeah, so I think, I mean, in terms of climate change, yes, I think absolutely there are lots of good reasons why, and Dave might well talk about why the IPSASB went with climate first, but I think obviously stakeholders, it's of great interest, isn't it, to the general public? I think it's absolutely the right starting point. I mean, in terms of the metrics and the challenges around the data are going to be difficult, and the challenges around providing assurance over that data will also be difficult to overcome, especially I touched earlier on, very briefly mentioned, that we're likely to start off at limited assurance rather than reasonable assurance. So how much credibility does that actually give to the data? And we're already seeing a lot of restatements of last year's data in the private sector as well, because things evolve, the methodologies evolve, and systems and processes get better. So the data in the early years will move a lot, and I think people just need to be cognizant of the fact that it won't be that's the actual answer, and that's what our emissions are, because it will probably evolve. In terms of what comes next, I think coming at it from a standard setting perspective, the IPSASB has already talked about the public policy side of what it's doing on climate, but I think probably as important, if not possibly more important, because I think public policy will be really hard to nail down, might be having an equivalent of IFRS 1 that gives the overarching framework that then future topic standards, biodiversity has been mentioned and others, then have a framework to fall into within the rest of the IPSASB piece. And I suppose final point on climate change, really from me, and linking it to the political cycle, climate change is long-term, politics isn't. So that adds another wrinkle when it comes particularly to central government. I mean, some of the more local public bodies maybe not, but the political cycle will impact on that. And similarly, the fair and balanced reporting is an interesting one. I often think trying to get a company to be fair and balanced and open and transparent is one thing. Trying to get a government to be fair and balanced and transparent might be quite another challenge altogether.
Yeah, thank you for that, Paul. Yeah, that's some very good points. Catherine, I said Katerina next, didn't I? Katerina, please go in. And
I mean, climate change affects so much, you know, the health, agriculture. So it is, of course, you know, a priority. And you could say, okay, well, through the prism of climate change, I'm going to assess, you know, the health effects on, you know, or, you know, the output of my hospital, the impact of my hospital. But I just have a hard time understanding how we sort of, you know, I don't wonder, is it a Western view? But because, you know, if I look to Asia, environment's much more important, social issues are much more important. And also, I mean, public sector has been reporting already broader, coming back to what Delphine said. Yeah, so we've already been, you know, reporting on social and environmental issues. So why limit ourselves so much would be the question. And how can we make it simple? Well, just have a good materiality analysis at the start. And I think it's really sort of try and focus the capacity building there and report what's significant. And if that's your agricultural policy and your nitrates, I'm currently in, you know, in the Netherlands, for example, then it might be that. So I think, yeah, it's a difficult one to square.
yes, and indeed, I agree. It's very difficult. I think there is a question because as Delphine said, the public sector does not start from a zero base. There is a question to be asked each time that you want something new as to whether having this together with the accounts, which is what we're normally talking about, is adding something to what already exists. And that's a tougher question, I think, in the public sector than it is in the private sector, and no less interesting. So Martin, we're back to you very quickly. Could you
on this question or the previous one, just to so I'm going to argue that climate is isn't the right topic. It is more cross-cutting than any other health, housing, infrastructure, agriculture, biodiversity, energy dependence, everything. But that also makes it more difficult to. Some things are a little different, especially accountability may be blurred is one of the more than in other cases. And sometimes the information going back to the information, the sustainability information to be reported, its use will be explorative. Government is not really comfortable by telling citizens we don't know what to do, but we're still figuring it out. Well, in many cases, this is the case when it comes to climate policy, and we can say, okay, make your policies more auditable, make smart goals, etc. As long as we are moving in the right direction, that may be valuable to assess. Finally, because I want to keep it short, the political economy is difficult. I mean, climate is the right issue, but asking voters and citizens to sacrifice things now for a long-term perspective is obviously tough, and the wrong way for governments to go about it. And this is something that auditors can include in the risk analysis. It's an important problem, but we don't know what to do, but we are allocating a lot of money to it. So we actually, often in government, we have plans, but no money, but sometimes we have money and no plans. And if that is the case, that can really erode the support that we need really hard for this tough topic in terms of political economy. I hope that was some sort of answer.
Martin, no, that's a very. I think that's a central point. Actually, I think one of the dilemmas actually is that the emphasis on putting resources into this issue means that there is quite a widespread, maybe minority, but it's a significant minority view that we're sort of wasting money in the way we address climate issues, and it's better to spend a big money than to do the things which are most effective, which actually I think plays into the doubts that some of us had about the public policy element of the IPSASB proposals. But I'll pass to Delphine, who's great on climate tagging and can help us out of this dilemma. Delphine?
Yes, thank you, Peter. So on your question, which was why to start with climate, I have to say again, if we look at what has already happened in the public sector, because we tend all the time to look at corporations and then say, oh, let's move to the public sector. But in fact, the public sector has been doing these things for years. And when we look at green budgeting, they started with climate also. We have a lot of papers on green budgeting at the OECD, where we show that, in fact, the scope of green budgeting has been increasing over time, meaning it started with climate mitigation very often, then went to climate adaptation, and then biodiversity, pollution, water sea management, circular economy, and so on have been added. Why did it start with climate? Because this is where the international treaties and commitments were the stronger at the time. So there is a very simple explanation, and I don't know if this is the reason why IPSASB started with climate, maybe not, but the focus on climate has, I think, a very clear rationale in the public sector, with an expansion that we see as governments and ministries of finance feel more secure, the methodologies are well understood, and they have the resources for increasing the scope of what they do. So again, I hope we will see the same thing with sustainability reporting, taking on board the fact that there is already a lot of information out there and that we need to ensure everything is consistent, and this is going to provide clarity and action.
Oh, yeah. Thank you, Delphine. I'm struggling with the mutes and the unmutes here. Dave, I think we come back to you, and we've had a very interesting discussion throughout the session. I guess, you know, we'd like to hear your views on where this, I mean, on the climate change issue, which you addressed, I think, actually, but, you know, if you have any thoughts on where this takes us in terms of the debate about future standards, it would be great to hear it.
No, so the question actually, the original question you asked, Peter, actually kind of takes me to where you just led us. And the reason the IPSASB got into climate first, and we always said climate first, is we asked our stakeholders, and our stakeholders, that's where the consensus was. We asked back in 2022, and that's just where everyone led us. And it doesn't mean we didn't hear other topics. We did hear from some jurisdictions that food security was important. They talked about how they weren't denying that climate was a major issue, but food security was today's problem for them. We heard about demographics, about how governments around the world were focusing more on the aging population in a number of countries, and in some countries how demographics are falling off a cliff. But I only raised those in that it's not that we didn't hear other topics, but people overwhelmingly said that we should go to climate first. Now, the reason why I say that leads us to where the IPSASB is going next, and you said what's next, is I don't know what's next. I'm sure we'll hear, we're out right now, we're starting to talk to our stakeholders about what to do next. Paul, you said the IPSASB is going to lean into public policy programs in 2026. We're going to work on implementation guidance for our own operations in 2026. But then at the end of 2026, we're going to have resources available again. And where should we go next? I don't know what stakeholders of the profession, where they want the IPSASB to focus its resources. And that'll be really interesting. We're out now, the consultation will be out soon. And Peter, like I said, it kind of comes full circle. We go where our stakeholders tell us to go. So that's why we're in climate, and it'll be interesting to see where we go next.
Dave, thank you very much for that. And I mean, it's interesting, the issues that you raised. Demographics is clearly going to have a massive impact on public finance, absolutely around the world, I think now. I saw that in Chile that they're at half the replacement level of fertility at the moment, you know, so it's and that's a country which hasn't really reached the living standards of Europe, where this thing is more known. And food security, it appears to me to be an issue that is very, very closely related to climate change, and there's probably a way of working that together. Biodiversity is the other area where there's an absolutely comparable international obligation in terms of doing something. So lots of fruitful issues for the future. I think we've had a fantastic discussion. I'd like to thank you, Dave, Delphine, Wim, Bernard, Paul, Katerina, and Martin for giving up their time. I hope everyone's found it a fruitful discussion. We are going to make the slides available to everyone who's registered for this, and there will be a recording of this event made available very soon. So thank you for participating, everyone. I think we haven't got to absolutely every one of the questions we've got answered, but I have a feeling that that all the issues have been addressed. So thanks very much to everyone for taking part. Thank you.
Thanks, everyone.
Thank you.
Thank you.
everyone.
Thank you.
Bye.
Bye.